Now, for the most part, as a long-term dividend growth investor, I would say at least most of the time, I invest in pretty safe, different dividend-paying stocks or ETFs. Because for me personally, instead of shooting for a massive gain or a super large dividend, I would personally rather take the slow and steady route most of the time. Although throughout my portfolio, as you can see right here, there are certain names in here that do offer a little bit more risk than others. But in this video specifically, for more of those risky investors, we're going to be going over and looking into 5 different monthly paying dividend stocks that could be all on sale as of right now, but are potentially on the riskier side of things. So if you want to see exactly which stocks are on this list, which stocks I'm talking about, make sure to drop a like down below, stick around, and let's get into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first monthly payer that is definitely on the riskier side of things, but could be offering a potential massive opportunity for those investors willing to take upon this risk, is Armor Residential REIT, or ticker symbol ARR. Now it says right here in Simply Safe Dividends, Armor Residential REIT invested in residential mortgage-backed securities, or MBS. Its security portfolio primarily consists of United States government-sponsored entities, or GSEs, and the government National Mortgage Administration's issued or guaranteed securities backed by a fixed rate. Now, just going off of some of the stats, this thing is definitely in the pile of riskier assets, if you ask me. ARR is offering a 15.8% forward dividend yield, apparently a 21 on the safety score, so this one is definitely unsafe. The dividend growth is negative 40%, and the beta is substantially high at 1.47. Now, even though ARR has seen a dividend cut, and this was around a year ago, the 24-cent dividend has been paid every single month since then. Now, because of how much this stock has been beat up, even after the dividend cut, it is still yielding considerably higher than other stocks across the market. For those riskier investors that want to potentially lock in a 15% plus yield, definitely look into this one. The next risky monthly paying dividend stock is one that I'm familiar with. We're talking about PSEC, or Prospect Capital. Now it says Prospect Capital is a business development company that specializes in middle market, mature, mezzanine finance, later stage, emerging growth, leveraged buyouts, etc. So if you know Main Street Capital, you're familiar with business development companies, but this stock from the looks of it seems substantially riskier than Main. Now Prospect Capital has a 30 on the dividend safety score, so a little bit safer than that of ARR, a almost 14% forward yield. The stock is trading around $5 as of right now. It has a low beta of 0.67, and although it doesn't have dividend growth, it does look like since around June 2023, a 6-cent dividend has been paid every single month on time, which I guess is something bullish. Also on top of that, 4 years dividends without a reduction. I know some dividend income focused investors that do invest in this one. I don't personally have any in my portfolio. I'd much rather buy into Main Street Capital, but Prospect Capital did come across the screener, so check it out if you want to. The next single monthly payer that is on the riskier side is actually a holding in my portfolio. I own a small amount of HRZN, or Horizon Technology Finance. Now it says right here, Horizon Technology Finance is a business development company specialized in lending and investing in development stage investments. HRZN's dividend is a 40 as far as safety goes. The dividend yield is 11.53%, and I know for a fact that HRZN has in fact paid dividends every single month on time because, like I said, it is in my portfolio. Now on top of that, HRZN has offered some special dividends, which are a bonus, and if you own Main Street Capital, you're probably very familiar with this. Main Street Capital also has paid lots of special dividends over the past few years. Now, even though HRZN has paid dividends for 6 years in a row, also has had some special dividends over the last year, HRZN, with the way it's trading currently, is offering one of the highest yields that this one has seen over the past 5 years. So if you're looking for a more higher risk, higher reward business development company, this one could be one to look into. Like I said, I do own some shares of it in my portfolio. The next riskier monthly payer is another one I'm very familiar with. I used to own Glad, I think, when I first started investing around 6 years ago. We're talking about Gladstone Capital Corporation. Now, Gladstone Capital is also a business development company similar to the last few. And with the way that Glad is trading as of currently, we're looking at a 9.21% forward yield. The dividend safety is 21 or unsafe. And the dividend growth, although there is a small amount of dividend growth during the last year and the last 5 years, the last 20 years is a -1 per year. Now, to be more specific, Glad has paid a dividend every single month for the last 2 years. And on top of that, last year there was also a special dividend payout to investors that were holding onto this one. Now, I'd be willing to bet that some of you guys that are watching this video are familiar with Glad, or maybe even have some shares of it in your portfolio. This is, for whatever reason, one of those really popular monthly payers. And I say for whatever reason because I don't think it offers all that much potential to grow and or to even raise their dividend whatsoever, but this one still comes across screeners a lot of times. Which brings me into our last higher risk, higher reward, potentially single stock that pays monthly. We're talking about good, ticker symbol GOOD or Gladstone Commercial. Now this single stock also comes across screeners quite often when you're looking up monthly payers for whatever reason, and is decently popular even though it yields around 9%, has a pretty unsafe dividend, and has not grown their dividend at all. To be even more specific, Good has actually cut their dividend in the last year. And although it's paid around 10 cents every single month for a while now, there's been no dividend growth and no dividend streak as far as this one goes. Still though, it is speculative, which means it could be undervalued. Definitely check out Good if you haven't already. So there we have it guys, 5 different riskier and potentially higher rewarding single stocks that all pay dividends monthly. Now I personally by no means would never make a large portion of my portfolio made up with any stock or ETF that I would consider risky whatsoever. But that doesn't mean that an investor shouldn't use a small cash balance and deploy it into some higher risk, high reward options. Now out of all the riskier names we went through in this video, if you had to choose one of them for whatever reason, which one would it be and why? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.